Now, if you clicked on this video, in the next 5 to 10 minutes, I'm going to explain to you why infrastructure projects are not a leading indicator when it comes to property investment. In fact, it's more likely to get you into trouble than actually provide to your successful portfolio. And I'm going to explain exactly why. Now, when I first started this YouTube channel, the whole reason I started on it was because I know people were looking at Gladstone to invest into. And Gladstone had some fundamental flaws that needed to be discussed. And I did so in that video where I had terrible mic quality. Now, 8 months on, my principles still stand the same, but my mic quality has gotten somewhat better. And if you didn't know Gladstone LGA is a major industrial hub when it comes to producing aluminium, cement, LNG or liquefied natural gas, which exports out of the port of Gladstone, right? It has one of the largest exporting coal terminals as well, and it also has other sectors like agriculture, fruits, nuts as well in this area. But Gladstone was heavily reliant on these industries of LNG, and they were trying to make the transition towards renewable energy. And there was really big grand plans to take Gladstone and change it from a old fossil fuel liquefied natural gas port into the state-of-the-art Australia-wide renewable energy ecosystem. And it was meant to change into this major renewable energy port and meant to be one of the biggest throughout Australia. In fact, there's a massive roadmap planned out from 2022 to 2032 about its 10-year economic transition roadmap, which basically takes us from liquefied natural gas and aluminium production to hydrogen renewable energies. And there was so much plan in place. There was so much public investment going into it from the state government, from foreign investors, all piling into money or proposing to pile money into this Gladstone economic transition. And one of the largest projects was the Central Queensland Hydrogen Project, or CQH2, which was basically going to create 1,000 jobs, $8.9 billion increase in Central Queensland GRP, as well as $9 billion in foreign direct investment and $14.5 billion in exports. And this was meant to be a huge hydrogen production facility developed near, I'm not going to even say the name of the suburb, near Gladstone, right? It's a huge hydrogen production facility and one of the centerpieces of this renewable transition in Gladstone. The only problem is that the Queensland government has withdrawn funding and support for the major green hydrogen project in Gladstone. And that's huge, right? And this happened in February, and I haven't covered it till now because I was busy doing other things. But the issue is that the government has now pulled out $12.5 billion of support from this project, right? This already indicates to us that there could be over 140 job losses. However, this could have a very broad impact onto the future of Gladstone, right? The whole purpose of this transition from renewable energy is to make sure people had jobs. You're changing the industry in Gladstone. You're having a new prosperous outlook on the future of Gladstone, but that is all now down in the dump. Now, does this mean it's over for Gladstone? No, there could be possible foreign investment into the project that could save it, that could keep it going, and this green hydrogen initiative can still keep going. However, this is a warning sign to you as an investor, as a person looking to buy properties in these areas, to look at these plans and these projects. Are they already underway? Is there already sites being developed, places being manufactured? Is there already jobs there? Because if not, plans are just plans, and foreign investment companies, the government, they can all pull out if they wanted to, right? Then that's the problem with investing purely on decisions or plans, so to speak, about what's happening in an area. Until something is in motion, anything can happen. And so when you hear these media articles of, $30 billion is going into Darwin, or $10 billion is going into South Australia's new Navy port, or building nuclear submarines, these things do not always necessarily correlate to actual outcome, right? They could just be plans and they can take it away. And the reason I say this is because when we look at Gladstone, over the past 12 months, it's done about 23% growth on SQM, which you can see here, postcode 4680. But back in 2012, Gladstone had a collapse off the back of the mining boom, and house prices sank to a very, very low $300,000 to $400,000. And with all this new hype and investment going into Gladstone from the renewable sector, from normal retail investors, from foreign investment companies into energy projects, one of the major centerpieces has now fallen. And that could have an adverse effect on the house prices in Gladstone. We could possibly see it revert, or we can even see it stagnate going into the future. And that is why it is incredibly risky to invest into location based off plans alone. Now, if you're a short-term investor, you probably invested back in early 2024 or late 2023, and then you would have made some money, and then you're probably looking to get out very soon. But if you're a long-term investor looking to hold for the long periods of time, 10, 15 years plus, this is a very scary time for you, because because the plans of Gladstone being transitioned from a LNG focused area to a renewable energy area has already hit one of its major roadblocks, the support from the federal government. And let me tell you, the government has withdrawn $12.5 billion. They're not going to go back on their word and say, hey, we want to support you now in your projects, right? That will be shooting themselves in the foot, and they're never going to do that. That's not how these things happen. And so when you're investing into a location, you need to be very careful about which articles you read, how much hype is being generated out of, plans of certain projects or infrastructure projects or new roads or highways or new unis, because plans are just plans, and until they're underway, it can always stop in progress. And that could have an adverse reaction to your portfolio. Now, we have to wait and see what's really going to happen in Gladstone and the future of its economy and its transition to renewable energy. A lot of those things are still undecided, right? They're going to do everything in their power to keep the transition going towards renewable energy. That's what they need to do to make sure their area LGA survives in the long term. But as short term for the investors, this is a very scary time for us. And so we need to be really careful about where we invest into. But don't worry, there is more to this, and I want to break it down for you. Before I do go any further, if you have not already, make sure you jump into the private community, because if you are part of this community, then you would have already been aware about the risk associated with investing into Gladstone and the possible pros and cons of each different location. And if you aren't part of the private community, then you are missing out. There's over 33 reviews for you guys to go have a read of about the community and the benefits that some members have had throughout this journey, right? You can ask me any question. It's $35 a month. It's an absolute no-brainer if you are trying to level up in the property investment game. So make sure you jump into it. Not only that, I do have a free newsletter, right? Over the next 30 days, I'll give you 30 property tips and insights. So all you have to do is type your email in, and over the next 30 days, I will give you 30 property tips that you can directly implement into your property investment journey. It's an absolute no-brainer. It's free, guys. So go put your email in, subscribe now, and I will send you the first email. Let's get back into the video. Now, following on from what I discussed about in Gladstone, I wanted to talk about the suburban rail loop. And I wanted to point to something interesting about what Dutton said if he wins the next election. Peter Dutton said he would scrap the $2.2 billion in federal funding for the Victorian suburban rail loop, right? Mr. Dutton says a coalition government would prioritize the Melbourne airport link alongside a future Victorian Liberal government if elected in May. The federal government had previously committed $5 billion to build a rail line to Tullamarine, as well as a further $2 billion in funding to create a new rail hub at Sunshine. So once again, the federal government or the possibly elected federal government could scrap another $2.2 billion in federal funding for Victoria Suburban Rail Loop. Now, this doesn't actually have the same impact on house prices or as a region in a whole in comparison to Gladstone, right? If Liberal wins the federal government in 2025, they pull the $2.2 billion in funding, the state government or private investors will have to look at filling that gap, right? And they'll most likely go over budget while building that as well, but that's another story. And the reason it has less of an impact is that unlike Gladstone, which is a regional town in the middle of arguably nowhere in Queensland, Melbourne is a capital city. Melbourne is an extremely diversified location that is perfect for a long-term hold that doesn't have the cyclical trends that like Gladstone does. So when federal funding is cut in a major infrastructure project, it does not have the same impact as it would have in an area like Gladstone. And the reason I want to bring that comparison up is because even though Dutton has threatened to cut the suburban rail loop out, it doesn't necessarily mean we could see house prices revert. While as in Gladstone, we have seen in the past that house prices, when the economy has a tough time, it reverts back. And right now what we're seeing again is that funding has been scrapped from the renewable energy project, and that could mean that house prices could go back if the Gladstone local economy fails to hold itself up with its current economic practices. And that's the issue, right? And I want to sum this video up because it's really important that you understand when you start to invest into regional locations like Albury, like Shepparton, like Bendigo, like Dubbo. So for example, if you start to hear that in Orange, they're going to start building a brand new hospital and university, or there's plans to build a brand new university hospital, but nothing is set in stone, nothing has been signed, no location has been identified, no work has even started, that should be a cause of concern. Right? We should not be investing on headlines only. We should not be investing on hype only. There are a number of factors that should be considered when investing into a location. And infrastructure plans and projects are only one part of the equation to a successful investment portfolio and a successful investment journey. Because if you rely on headlines only, then you will get yourself into trouble. And that's and I'm talking from the bottom of my heart here, right? So when you start to invest regionally and you start to look at these small towns or these small regional locations that are dependent on one or two industries to sustain their economy, and they have these grand plans and grandiose plans that rely on foreign investment or government investment, that can get you into trouble. You really need to be careful, right? So once again, it's only one part of the equation. Infrastructure projects are important because it creates jobs, it adds to the economy, adds to the GDP of the area, and then brings in more people to the area, which means that demand increases, but supply hasn't, and we should see house prices increase. But when those projects are pooled, that can have an adverse reaction on house prices. So I just wanted to make this video to help you guys understand why infrastructure projects are just one part of the property investment equation. So I hope this video has helped you, and if you have any comments down below, please leave it there.